Hello, and you're welcome to Global Business Insights, where we look at headlines from a deeper business perspective. In the UK, we saw a solid rise in private sector activity, but growth has slowed since August. That's from the flash September PMIs. The composite output index in the UK was 52.9, lower than August's 53.8, and also a 2-month low. However, in Germany, the composite output index came in at 47.2, the weakest PMI read in 7 months. Also, as September Eurozone business activity contracts hitting 8-month low. That's quite a dip. The People's Bank of China today lowered the 14-day reverse repurchase rate to 1.85% from 1.95% previously. The central bank also injected 74.5 billion yuan, that's about $10.6 billion of liquidity into the banking system. This is as the Apex Bank addresses the slowdown in the Chinese economy. Global markets still mostly positive after optimism associated with the Federal Reserve's half-point rate cut. Analysts also see more than a 50% chance of another outsized move. That's in November. The US rate cut also led to lower bond yields, which helped keep gold up at $2,620 an ounce, just off an all-time peak. The Eurozone's biggest bank, BNP Paribas, is buying the private banking arm of HSBC in Germany, saying this deal could increase its exposure to entrepreneurs in the country. It did not disclose, however, any financial details of the purchase. Oil prices somewhat steady today, but they rallied last week 4% as slowing demand concerns were outweighed by hopes that lower borrowing costs would support a global economic recovery. Brent early morning trade just under $75 a barrel. Still a few central bank decisions this week. Central Bank of Nigeria may pause or deliver a more measured rate hike when it meets today and tomorrow. The Swiss National Bank on Thursday is expected to cut rates by 25 basis points, but there's also a 41% chance of a higher 50 basis points reduction. Sweden's central bank meets on Wednesday, also expected to ease by 25 basis points. The Reserve Bank of Australia, however, almost sure to hold at 4.35%. Perhaps the big test for Fed Chair Jerome Powell will have to do with the new batch of data to see if it supports his assertion that the U.S. economy remains strong. We get Q2 GDP readings due on Thursday. That would help test that contention. And the Fed Chair was careful not to declare victory over inflation, given pricing pressures still there but coming down. Friday's scheduled release of the PCE, that's the Fed's preferred inflation gauge, personal consumption expenditure index, will also offer another progress report on the war to bring inflation down. Our deep dive is a discussion on the latest flash September PMIs out this morning in Europe and the UK. In the afternoon, we get the US PMI data. The US economy is the main issue as presidential elections are about to take place. VP Harris is expected later this week to unveil an updated economic agenda on wealth creation. The PMI hopefully will shed more light on how the global economy fared in the third quarter, with China still at best tepid. Many are hoping the West will do more of the heavy lifting so that we see better global economic growth. Still on PMIs, the preliminary September reading of Australia's Judo Bank manufacturing PMI fell to 46.7 from 48.5 in August. Australian services PMI also eased to 50.6 in September from the previous reading of 52.5. As German Chancellor Olaf Scholz's Social Democrats, SPD, managed to fend off the far-right AfD in a key state election, despite trailing behind the party according to exit polls. Both the manufacturing and services sectors in Europe's largest economy saw a downturn that worsened. That's from the latest PMI data. The HCOB Hamburg Commercial Bank manufacturing PMI for September dropped in Germany to a year low at 40.3 this month, as against 42.4, also missing estimates of 42.4. Services PMI also sank to a 6-month low to 50.6 in September, below the market forecast. The composite output index came in at 47.2. That was the weakest we've seen in 7 months. According to Dr. Cyrus Dollar-Rubia, chief economist at Hamburg Commercial Bank, he said the data intensifies the ongoing debate on the risk of deindustrialization and what the government should do about it. Also, that the rapid downturn in sentiment is most likely linked to the wave of negative headlines surrounding Volkswagen, which has cast a shadow over the broader industry, with the slump in manufacturing beginning to spill over to services in Europe's economic powerhouse. GDP for Q2 in Germany shrank 0.1%. In Q3, another drop of 0.2% is expected, implying a shallow recession, with hope that the fourth quarter will be better as higher wages combined with lower inflation should hopefully boost not only real income but also consumption, and that will also support domestic demand. In the Eurozone, after an Olympics-related boost to business activity in August, output in the French private sector returned to contraction in September, joining Germany, where the pace of decline in activity was the most pronounced since February. The rest of the euro area saw output rise again at the end of the third quarter. That's according to data that just came out today, although the pace of expansion was only modest and the softest since January. The September Eurozone Composite PMI, not surprisingly, registered an 8-month low, contracting to 48.9. Finance Chancellor Rachel Reeves in the UK is expected to tell this week's Labour conference that unless public finances are stabilised, the UK could face ruin. She has been insisting that tough decisions on spending are necessary to bring about economic growth, interpreted as preparing taxpayers for tax rises in next month's budget. She's still calling the budget one that will fix the foundations, not calling it austerity, but one that also delivers promised change and will rebuild Britain. For her, the first test could be how she sells, or if she's ditching reported plans to scrap winter fuel payments for 10 million pensioners, leaving tens of thousands of elderly Britons worse off. Delegates at the Liverpool conference may also oppose a raft of painful measures justified by claims that the new government was left with a £22 billion black hole in the public finances. This comes as we get the latest UK PMI coming in today. This morning, the economy still in expansion territory but slowing. Commenting on the data, Chief Business Economist at S&P Global Market Intelligence, Chris Williamson, said the data showed robust economic growth accompanied by a cooling of inflationary pressures, hinting at soft landing for the UK economy. The data also was consistent with the economy growing at a rate approaching 0.3% in the third quarter, also in line with the Bank of England's forecast. Asian stocks inched up as investors digested monetary policy decisions from Japan and China and expectations of more rate cuts from global central banks. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. We will be taking a break after tomorrow's broadcast for about 2 weeks, but we'll be back in 2 weeks' time. Tomorrow we will feature the Central Bank of Nigeria's decision. That's the Monetary Policy Committee meetings decision on interest rates. From me, it's bye-bye.